Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, October 29th, 2023. Hope you guys are having a fantastic weekend, and let's get started. So on Friday, I had put in the morning notes that I really wasn't quite sure who was going to try to hold on to long positions heading into the weekend, just because of the geopolitical uncertainty. And we saw the bulls try to give it a little go, and then sellers just stepped in and pretty much took it right into some support. So here you can see on the daily chart that we do have bullish divergences. We're pretty oversold. And right now you can see this is the support level that we found a low at, and that was 4,100. And then we got a little bit of a bounce off of that, about 17 points. So if we still need more work to the downside, you can see that we have the 60% retracement, 62% retracement at the where is that? 41.87. And then if they lose that, then we have support down at the 40, right around that 40.53. So we have support right here. And if we look at this 60-minute chart, we have a little bit of some bullish divergences. Not many. We may need to have a little bit more of a defined bullish divergence before everything is said and done. So if that's the case, then we should see up and then down again. But if we're gonna see the bullish divergences form, and we do come down to the 62% retracement, which is also support, it may be, we could be looking at a decent little bounce. And again, I don't know what the catalyst is going to be. I know that I read some stuff about Russia trying to do a ceasefire for some hostages to go. I mean, anything like that. I think it's just going to ignite a pretty good short covering squeeze, and that's really what we're looking for. We're looking for that squeeze to make the easy money on the upside, and then just move back to a neutral stance and see what the next what the next trade's going to be. Instead of sitting there saying that we're starting a new bear market or a new bull market, who cares? I've been saying that for a long time now, that it makes no difference. We're up probably, I would say, almost tenfold on what these people are doing when they're looking for either just one direction on the long side or the short side, because we've gone up and we've gone down, and we really haven't gone anywhere. So I'm going to continue with that game plan. And again, if we come down, we have the support at the 40.87 and then down at the 40.54. So we have some decent support. If we get there, I may be looking to pick up some another little third of a position. 15-minute chart, you can see we do have bullish divergences on it. This is getting to be a pretty defined little bearish wedge that we have. I mean, bullish wedge, meaning that we're it's coming down to where things are starting to get pretty tight on the downside with it. So hang on one second. I'm going to just draw this a little bit better. So let's just use this part here, because this is really where it's going to be starting to get tight, would be if we're using this high right here as the top of the trend line. So you can see we're kind of tweezering it is probably the best way to put it, where it's getting really, really tight down at the bottom. We have sentiment that's at extremes, and if we just get a bounce just off of this little bullish wedge, we're looking at a move up at the 42.60 level. So again, looking to purchase, if we get long and this support holds, and let's just say we just go to the top of this, to where the wedge is, or what this pattern's calling, we're looking probably at another 130, 140 point gain on the S&P. And again, we just do that month in and month out. There is no, thinking about anything else. It's just making, some nice trades and, making the easy money and then stepping out. So the important level for the for the bulls is really they're going to have to get it above the 41.40, and then really right here at the 41.70. If they can get through this resistance zone, that's when we should see a quick move move up to the 4,200 and most likely back up to the 4,250. If they get above this resistance, that's when we start looking at a move up to the 4,300 and possibly 44. But right now, we're just worried about what's going to happen short term, and that's really what the bulls need to get above. So, and again, on the downside, it's fairly simple. We have the 40.87 and then down at the 40.54. So as long as nothing really crazy happens over to come when the markets open tomorrow, we have to just wait and see how traders are feeling on it. But like I said, I do believe that we're trying to scrape out some kind of low here. And the main reason, we have sentiment that's starting to get, flushed down the drain right now. So nobody's really bullish on this market time period. We were looking for, the bearish time period to end on 10-10. We've gone lower than that, but we're just looking at the time period and what the predictive analytics model is saying. And then we just look at technicals, and we have buy signals on the on the daily chart and on the 15s, and there's a chance that we could be setting up some bullish divergences right here as well. So I'm not screaming pound the table, we have to buy. It's still very, very dangerous out there, and there's a lot of uncertainty, but I would be really, really cautious if you're looking short term and you're shorting, just because, as I said, there's a lot of gasoline on this fire, and if the bulls can pull anything out just to ignite any kind of spark, I do believe this thing is going to just turn into an inferno, and we're going to see a lot of shorts covering, and we should see some decent points to the upside once the low is made. So let's see what plays out tomorrow. Have a great rest of your weekend, and I'll talk to you guys in the morning.